Optimistic or not? I mean, earnings themselves, of course, should continue to grow, but relative to expectations.
Well, I think that's the key question with respect to this year's relatively strong numbers. The one or two headwinds that exist next year for profits are going against what have been good numbers in 2017, so the comparables are going to be more difficult. But you do have some tailwinds that are coming through with respect to tax reform. Greg Gipp was talking about the weaker dollar, global growth. All of those are tailwinds. The headwinds are strong comparisons, possibly some other wrinkles that may emerge along the way. And the Federal Reserve might be one of them if it decides to raise interest rates rapidly next year.
But where do you stand in terms of what's already priced in, particularly things like tax reform, given that Q4 itself was such a strong quarter?
Well, remember, we're not looking at the macro specifically. We look at individual companies, but you take all of this into consideration. And I think, listening to what Ron said, I could add that you could also have some confusion with the trade, the president's approach to trade and what that may or may not do and as it affects inflation. But when we're looking at it, because we're looking where companies are going to trip up, and as we think you may see more earnings misses, especially if investors are willing to look through what may be a pop because of tax benefits and really go back and start looking at earnings quality, because we continue to believe, with this market doing what it's been doing, it's sort of rocked people into complacency about the quality of how companies are getting those earnings. And you need to start looking at revenue growth, obviously, which you're always looking at. But then you really want to look at how are those numbers being made. And we think that's going to be a great year for us, because we think it's going to be tougher for them to make it the way they've been making it without being noticed.
So, Herb, next year you think is a year active managers, short sellers can come back to the fore and really outperform rather than just riding the tide that everyone else is enjoying?
I think that's always, yes. I think that's a great point. I look back at this past year, and we have quite a few names that have really imploded. And it shows that you always have to be on your toes, because that's always going to be the case. But yes, I think this year we have a potentially greater opportunity. The trick, of course, is always the case, is finding those ahead of time.
I think that's a really great point, because you hear so many instances this year, years past, quarters past, of companies, the earnings beat wasn't high quality because they had the benefit of a lower tax rate. So the question is, do we start looking through this? And also, what happens beyond 2018 and 2019 when the comparisons are harder? I mean, then you're really looking at an apples to apples. Was there growth in the underlying business?
Not only that, we're doing it against increasing earnings estimates by analysts, right? So instead of lowering their numbers, which has typically been helpful to stock prices over the last several years, they're now raising their numbers because of tax reform. So it does raise the margin of error relative to what we've seen in the last couple of years.
Next year on, do we get global tailwinds or headwinds? Clearly this year has very much been the former.
It's hard to tell. I mean, you do have some monetary tightening coming in the U.S., in Europe, in England, in Great Britain, in a variety of places where Japan even could start to tighten, given that their inflation numbers have ticked up. So we may not have the interest rate tailwinds that we've had before. It's switching to fiscal stimulus. The other question is global growth maintainable? Copper prices, commodity prices, all up, suggesting at least in the near term, the global economy still looks pretty good.
Herb, just quickly, in the U.S., which sector do you think you're most likely to find some of those shorts you're searching for?
Wilfred, we don't look at sectors, we look at companies. And I can tell you right now, it's,
So name one.
Pick your sector. Well, no, because this past year, consumer packaged goods was very good for people like us. We started looking at companies, even the past year or two, looking at companies like Kellogg and Newell Brands and things like that. So going forward, I think there's going to be some spillover in the CPG space. I think, you could look out. One of the things we think about is, could you see in the software as a services, some of these companies have grown and grown and grown. Will they continue to grow, or do we have the all-in effect for some of those companies? So there are a variety of things you can look at. I don't think you can pinpoint any one, eeny, meeny, miny, mo, because I don't think it quite works that way, as much as I know you'd like me to say it does.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.